Let's talk about trend lines and how to use trend lines in your trading to find the best trades, understand the markets, and ride trends for the optimal time. And once again, I have to really thank you for the great feedback, all the comments, all the likes. Thank you for sharing my videos with your trading friends. It is really helping and it's really making a big difference with the YouTube algorithm. So if you enjoyed this video, leave a comment, leave a like, and I am reading every single comment. It's great to see those interactions and that you are really enjoying my videos. And now I have prepared a trendline video because many of you have requested it in the last video. And I will provide different tips and ways how trendlines may help you in your trading. And the first thing that we are going to look for is when we draw a trend line. First of all, it's very important that you always have multiple touch points on your trend line. So here in this case, we have 1, 2, and we have 3. I would not really consider this a valid touch point because this wick is not really confirming the trend line. But we can clearly see we have 1, 2, and a third one. What you don't want to see is that a body is closing through a trend line. In this case, it wouldn't be a confirmed and a valid trend line. But as long as there's just a wick sticking through it, that's totally fine. And in my last video, I explained the strategy from the trendline breakouts. And very, very often before a trendline breakout, you will see that the highs and the low structure is already shifting. So we have a bullish trend line here drawn. And before the breakout below the trend line and before the new trend was initiated, there was already a hint that the market was going to roll over, is rolling over actually in real time. So you can see from here to here the market made a significantly lower high, whereas previously the market always made higher highs and higher lows. Now it's the first time the market made a lower high, which is a very, very important finding and an important piece of information. And then here on the breakout, you can see now all those pieces are coming together. If you have the trend rider, you will see even the trend rider is giving you here now the bearish signal, and then the market completely collapsed and started a new downtrend. And we will see this pattern and the signal a few more times in different variations throughout the video, and it's a very, very powerful one. So trendline trading on its own, just looking at a trend line and looking for a breakout is not enough. But once you build a nice story around your trend line and look at momentum structure and trend structure, this may help you improve your trading significantly. Here we have another scenario. So the market was trading within a range. We have one swing point on the left. We have another swing point here. We have a nicely defined resistance level. And then the market trades into the trend, into the resistance another time. And first it looks like it's breaking out. You can see the market is closing above the previous closes and it's moving higher. But when we look at the price action, you are seeing that this is not a high momentum, this is not a strong trending market. You will see very, very small wicks, very small candle bodies, very large wicks, which indicate uncertainty, which also indicate a lack of momentum. Then here you have maybe a double or a triple top where the market is not able to push higher anymore. So by now it already should get your attention, and it may look like this is not actually a high momentum breakout. And you have a trend line here. When we draw it underneath the price, you have 1, 2, and a third touch point. You have the component of a lower or of a double top with a potential failed breakout. And then you can see the market accelerates away from the level. So here we have a spike with a pin bar. We have a large candle. And then here we have another large candle, which is now breaking the trend line, which is also really showing that we are back in the range, now confirming the failed breakout. And then you can see the market completely collapses and trends lower. So again, a trend line alone is not good enough, but if you can put other components, other concepts of technical analysis and momentum analysis together, you are getting a very, very powerful and robust method of analyzing the market. Here, this is something that we traded in our masterclass with our students. We were looking at a very, very long previous uptrend. The trend line has 1, 2, 3, 4, 5 touch points, so more than enough. And then before the market is trading into the trend line, you can already see The market is making significantly higher low here. We now also on the breakout, if you trade the breakout or not, that's a little bit up to you. There are other ways how you can trade trend lines. And in one of my strategies, I also add a support or a swing break to the trend line. So I'm not trading automatically the trend line break, but I'm waiting for the market to break the last swing low and swing high. And by that time, you have the trend line break, you have another significantly lower high, and you can see the market is also breaking this long-term 100 period moving average. So a lot of things are coming together here. Here may have been a potential entry, and you can see we get in the very, very decent downtrending move. So again, a trend line not enough to trade by itself, but if you can layer other factors on top of that, you can improve your skills for technical analysis significantly. Here we are now combining the trend line together with the momentum divergence. So you can see we have a very well-defined trend line, 1, 2, and the third touch points. Here we come very close, but you can adjust the trend line to get the third touch point. And then here, if you draw your another trend line here, you can see the market is barely making lower lows, which indicates already a loss of momentum. This is confirmed by the momentum divergence here on the RSI indicator. And then you can see we have this failed breakout here to the downside. The market is rounding up to break the trend line, to break above the previous highs, and then the new uptrend is started. So you have various options and you have many ways how you can add other components and confluence factors to trend lines, looking at how strong is the market breaking into new lows, how is the rounding off price action, which I've talked about a lot in previous videos when it comes to deceleration and acceleration and momentum divergences. Here we have a wedge pattern, which is another very, very important feature and another important price pattern, because it tells us, just think about it, what does it tell you? That during this downtrend, the market easily always made lower lows and lower highs. But here, now is the first time that the market is struggling. It's making more or less a double bottom. And you can see from here to here, it's even making a higher low, which indicates that now the market is not coming close into the previous highs. We have a trend line also, and on the trend line break, that's where the market shifts to the upside. Here's also something very interesting happening in the trend continuation strength. So whereas here you can see we have strong bearish moves here during this phase, we may have a smaller bearish move, and then afterwards there's no more bearish move coming. So the bears are slowly withdrawing, the bears are slowly leaving the market, and the buyers are now entering the market at this price. We can also use trend lines for trend continuation trading. So here we look at a broad long-term downtrending market indicated by lower lows and lower highs. And very often during those trending markets, you will see temporary pauses, temporary consolidations. And sometimes you will be able to map out such a consolidation with a trend line. And just looking at how this consolidation looks like in the bigger picture. So whereas here we have a very strong downtrend, the market traded lower very quickly with a very steep angle. This consolidation doesn't look very bullish, right? This consolidation just barely is able to move higher. Here you can see when we connect the lows, the trend line has a very shallow angle. And when you look at the highs, you can see that the highs are even coming down once again. We have our highest point here during the consolidation, lower high and lower high. So this consolidation doesn't look like the market is really starting an uptrend, but it looks more like the bears are just taking a break, and here on the breakout are confirming then the continuation. And we will look at those two areas on the lower time frames. So this is the daily, and we will now go to the lower time frame to look at how those look, because we may be able to use the same components and the same concepts on the lower time frame as well. So those are the two green marked areas from the higher time frame. And here we can also draw a very nice trend line connecting the lows. We have 1, 2, 3, maybe 4 touch points. And again, before the breakout, you can see the market is making lower highs, which is already quite a bearish signal. And then we have a breakout, we have a retest, but the market is never breaking into the highs once again, and it continues the downtrend. It's also always trading below the 200 period moving average, which from the higher time frame confirms the downtrend. Here we have another consolidation We connect the lows to get the trend line. We see that the highs are coming down, which is a confirmation that there's not a lot of bullish momentum. So those are very weak consolidations during an overall downtrend that we saw on the higher time frame. And then you can use this knowledge, those patterns, to find trend continuations on the lower time frames. And this is something I briefly touched upon this in 3 slides back, where when we look at how strong do trending phases behave and how do trending phases develop, this will tell us a lot. So during this initial downtrend, you can see the market sold off quickly in a short period of time. So a quick drop, another quick drop, and then here as the market moved into the low and continued to downtrend, we are not seeing those strong bearish phases anymore. So we're not seeing strong bearish phases, which means that the market is losing strength and the bears are not as interested anymore. They're not as strong anymore. And this is indicated by the trend line. You can see we connect the highs, 1, 2, 3 touch points. We look at the lows. The lows are almost not able to move lower anymore. Here we make higher lows. And then we have a complete trend shift. And this was already indicated. The trend shift was indicated by all those factors when we put them together to allow the price to tell us a nice story. Very strong, and then here, once we enter the wedge, the market is really slowing down. And then the only thing that you need is patience. You need to wait for the market to break out of the trend line. Maybe you can even draw a horizontal level in here to have a little bit more objectivity. And then you see that a new trend often emerges once those patterns get triggered. And this is how you can use trend lines in so many different ways. Again, I would really encourage you to not trade trend lines as a standalone strategy, but add other components, add other tools, other factors, and maybe another indicator to it to potentially improve your setup quality, your trading quality, and to filter out situations when trend lines are not as applicable. And then you may improve the way you look at charts. If you like this video, again, please leave a thumbs up, leave a comment, and I really look forward to you. I'm reading every single comment, so let me know what you think, and until the next time.